we are kicking things off with Alphabet Inc. We dive deep into the earnings report and look at the underlying numbers that are telling us the real story. We are examining Alphabet's accrual ratio and what it truly means for shareholder value after their recent release. Find out if those strong headline numbers are sustainable or if there are hidden cracks in the foundation of Alphabet's profitability.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Next up, we are looking at the massive future of technology. We are exploring the predictions from Elon Musk about the 10 billion humanoid robots by 2040 and the staggering $250 trillion market this could create. This isn't just about one company. It's about the entire AI ecosystem that is set to redefine the global economy. Get ready to see which under-owned company is holding the key to this revolution. Now we turn our focus back to Alphabet's valuation. We are analyzing the recent share price momentum and looking at the intrinsic value estimate of $237.43. Is Alphabet trading at a premium, or is this a fresh opportunity for investors to catch up? We'll unpack the risks facing this narrative and see if the growth assumptions can really support those high expectations. And finally, we get a significant update on Alphabet. DBS Bank has just adjusted its price target on Alphabet to $460, moving up from $400. This signals a shift in institutional sentiment, so you need to hear this. Don't miss out on this crucial insight and subscribe right now to get all the analysis you need to navigate the market. Alphabet Inc. NASDAQ, GOOGL. Stock experienced a rise following the release of a robust earnings report, though analysts caution shareholders to assess the underlying quality of those earnings. While headline figures were strong, deeper analysis revealed potential concerns regarding profit sustainability. A key metric highlighted is the accrual ratio from cash flow, which measures how well a company's reported profit is supported by free cash flow, FCF. A positive accrual ratio can indicate that FCF fell short of reported profits, a situation Alphabet faced. For the year ending March 2026, Alphabet reported a free cash flow of $64 billion against statutory profits of $160.2 billion, resulting in a relatively high accrual ratio of 0.28, signaling that FCF did not fully cover earnings. This weak accrual ratio was partly influenced by unusual items that significantly boosted statutory profit by $51 billion in the last year. Analysts suggest that such boosts from non-recurring events are often not repeatable, leading to the conclusion that Alphabet's reported profits may present an overly optimistic view of its sustainable profitability level. Despite the weak accrual ratio, the company's performance was bolstered by these unusual items. Therefore, while acknowledging the strong top-line earnings, investors must scrutinize the quality of those profits. The report advises shareholders to consider risks beyond earnings, noting that high accrual ratios have been linked in academic studies to lower profit growth. In summary, while Alphabet posted strong earnings, the impact of one-time items suggests caution is warranted regarding the long-term sustainability of its reported profitability. The report emphasizes that evaluating earnings quality alongside other fundamental indicators remains crucial for informed investment decisions. Wall Street and tech investors are intensely focused on the transformative potential of generative artificial intelligence, with predictions suggesting an economic shift worth trillions. Following remarks by Jeff Bezos about a breakthrough technology shaping Amazon's future, CEO Andy Jassy has characterized generative AI as a once-in-a-lifetime technology already being integrated across the company to redefine customer experiences. This excitement was amplified at the 8th Future Investment Initiative Conference, where Elon Musk projected that by 2040, there could be 10 billion humanoid robots, each priced between $20,000 and $25,000, potentially valuing the technology at $250 trillion. While this massive potential is seen by firms like PwC and McKinsey, the core of this revolution lies in a fundamental breakthrough redefining human capability. Analysts suggest that while major players like NVIDIA, Alphabet, and Microsoft are prominent, the key to this multi-trillion-dollar wave may reside in a smaller, under-owned company possessing critical, yet currently overlooked, AI technology. Insiders suggest this company's foundational technology should concern its rivals. The report urges investors to look beyond the obvious tech giants, pointing to a quiet innovator whose technology is essential for this global economic reshaping. The content promotes an exclusive, members-only report detailing this game-changing AI stock and offers access through a subscription model, highlighting benefits such as in-depth research, a monthly newsletter with curated stock picks, ad-free browsing, and a 30-day money-back guarantee. The call to action emphasizes urgency, stating that opportunities in this sector are fleeting and limited to 1,000 spots for the exclusive offer. Alphabet Nasdaq GOOGL, is currently under intense scrutiny following recent positive share price momentum, including a 2.5% gain in the last day and a 3.4% increase over the past week. This activity has prompted deeper analysis into the company's underlying fundamentals. Despite the recent price movement, historical data suggests a strong underlying trend, evidenced by a 30.3% one-month share price return and a substantial one-year total shareholder return, indicating strong momentum rather than a mere recent spike. The recent stock performance has pushed Alphabet close to analyst targets, leading some intrinsic value estimates to suggest the stock may be trading at a premium. Analysts are questioning whether this momentum signals a fresh investment opportunity or if the market has already fully priced in anticipated future growth. Specifically, Alphabet's last closing price of $398.04 is significantly above the $237.43 fair value implied by the most followed narrative, establishing a clear valuation gap that requires examination. Analysts note that while Alphabet possesses a strong cash generation profile and solid margins, its valuation can still appear expensive when assessed through the current framework. This discrepancy is attributed to assumptions surrounding growth projections, profit sustainability, and the earnings multiple embedded within the $237.43 estimate. Key risks to this valuation narrative include the possibility that anticipated AI spending fails to translate into expected profitability, or that regulatory actions significantly impact advertising or cloud economics. Beyond the core business, Alphabet's other bets, such as Waymo and Verily, represent high-risk, high-reward avenues that could yield significant long-term returns. Investors are advised to weigh the mixed sentiment by examining the trade-off between optimism and concerns, focusing on two key rewards and one important warning sign. For existing shareholders, the recommendation is to compare Alphabet against a broader set of quality stocks to identify potentially stronger opportunities. DBS Bank has revised its price target for Alphabet stock, lowering the projection from $400 to $460. This adjustment was reported on May 7, 2026. The change reflects a reassessment of the company's valuation and future prospects within the current market conditions.